Hey, very good day to one and all. For this weekend in Growing Your Tree of Prosperity, I will be talking about a very sensitive issue that's been going on in mainstream media. And apparently, um, there is a war going on over the concept of investment linked policies or ILPs. And so, what I've decided to do for this weekend is to create a more thoughtful video that will assist viewers in answering the question on whether ILPs or investment linked policies are good or bad. Okay. And before I begin, just a short little introduction to what ILPs are. ILPs stand for investment linked policies. They are a hybrid insurance investment product. So you pay premiums to a life insurance company, and part of the premiums goes on to buy investment units with one or more investment sub funds. And the remainder portion is then used to pay for insurance cover. So it is like a hybrid instrument. Part of it is insurance, part of it is investment. Okay. And the value of your policy rises and falls with the performance of the underlying investments. And more importantly, there are no guaranteed returns for most ILPs. Okay, so in a nutshell, this is what ILPs are. Over the years, they've disappointed a lot of investors, and they're very unhappy people. And you definitely know of someone whose money is stuck on an ILP and they don't know what to do with it. Okay. All right. So recently, um, people have been coming out from the woodwork to criticize ILPs. And it's very difficult for journalists to do this because if a journalist were to criticize ILPs or investment linked policies, the companies that sell these investment policies would then apply pressure, right? And they'll say that, hey, if you keep criticizing us, maybe we will cut down on our advertising or marketing expenses with your organization. So it's not easy to do this over the years. And now I think it's reached boiling point. And I think some journalists now have the courage to sort of openly criticize this product in the markets. And some of the arguments come in the form of, these high recurring wrapper fees of 4 to 5%, the opacity of market risk, complicated moving parts like, how much of it goes into insurance? Does that insurance component expand over time? And obviously, there is also the rising number of complaints and dispute resolution requests, okay, going into FIDREC, right? So what I've decided to do is that I want to create a video that doesn't take sides, right? The people who know me publicly know that I'm very anti-ILP. In fact, I'm against anything that the commission financial advisors sell. But I have decided for this video to be as balanced as possible. And I've gotten artificial intelligence to assist me on this, right? Because I think that the battle has gone on to a new level. And Singaporeans should lobby to their members of parliament and constantly play a very public advocacy role to curb the availability of this product. And in order to do this, you cannot be partisan. In other words, I cannot be very anti-ILP. I need to understand what are the arguments on the pro-ILP side so that when we bring this up to the legislators or to the regulators, we can have a good, mature discussion on how to protect the middle class and the Singaporeans from this very toxic product. All right. So this is going to be the approach on my video. And for the financial advisors watching this video, you will find that there are many arguments for ILPs. I'm going to share that because I really want viewers to take sides and argue, right? If you really hate ILPs, why? Right? But in order to do so, you need to understand the convincing arguments on the other side. Okay. All right. So what artificial intelligence has done is that they have summarized all the important publications recently that are critical or are defensive on ILPs. All right. And September 2025, there's a very critical article that says that, the cost rise with your age, the complexity of ILPs is often misunderstood by the buyer. And now they find that the complaints have been rising sharply, right? And so the regulation is tightening around this area, right? But then angry commission financial advisors then began to write letters that are very defensive and very pro-ILP, and they argue that the critics oversimplify ILPs, newer versions have lower costs, and it has their role in holistic planning. Okay, some of the more neutral voices say that there are potential benefits, but they highlight the importance of understanding the cost structure and the time horizon. And MES and Money Sense have also taken some steps to mention that ILPs are legitimate, but they are high risk, high complexity instruments, and consumers must understand what they're paying for. Okay, so this sort of summarizes the mainstream media and what they've been ILPs. So now what I'm going to do is I am going to share with you all the arguments one by one, all right? And the beautiful thing about ChatGPT is that it's able to summarize the arguments based on a particular dimension so that we can have a mature and measured way of looking at the arguments from both sides, all right? So let's look at the first dimension, purpose and design. And the people who are pro-ILP say that ILPs combine investment and insurance in a single package, easier for clients who want both. All right. So they don't need to think so much, investment in insurance, everything that arrives in the same package as once. But the critics say that mixing investment and insurance blurs transparency and suitability. So it's better to buy term and invest the rest. All right. Okay. So the purpose and design, that's the first argument. The second argument is cost structure. Okay. And the people who are pro ILP say that, well, the newer ILPs have streamlined or capped the fees to less than 2%. And they also provide these bonus credits that offset the cost over time. But the critics say that early premiums mostly pay distribution and admin charges, and the layered fees often exceed 4 to 5%, eroding returns. Okay, 4 to 5% is a significant number. Okay, so you have to balance these two arguments with each other. Thirdly, when it comes to investment access, the pro-ILP group say that ILPs offer access to professionally managed sub-funds, including currency hedge or institutional strategies that retail investors can't normally buy. I find this particularly strong because I think what the industry is trying to do now is that they are trying to emphasize the currency hedge capabilities of these professional funds. And they're also saying that, well, actually, you can't buy these funds if you're not an accredited investor, but through an ILP, you're able to do that, right? So this is one of those arguments that I noticed that FAs are increasingly trying to use to convince people of how good ILPs are, right? Yeah, but of course, the critics have a different view. Sub-fund menus are limited, they're curated by insurers, and the investors lose the freedom to buy cheap ETFs or direct unit trusts. All right. And I think what most savvy investors know that if you were to buy an ETF, your annual expenses can go from 4 to 5% to 0.3%. Right. In fact, if you were to buy some kind of treasury bond ETF, I think 0.15% every year. All right. So the amount is pretty revolutionary. Okay. So these are the first three aspects of the argument. Okay, let's continue on. Let's talk about suitability and target segment. All right. The pro ILP crowd says that it is useful for investors who are hands off, right? They are seeking integrated cover and diversification without managing separate investments. Okay. But the mainstream press say that, well, it's not suitable for most retail investors who lack an understanding of fund risk pricing and long-term cost impact. Right? The regulatory view, some agents, this is a funny argument. They say that ILPs remain legitimate. All right. So if there's something wrong with ILPs, it's because it is missold. All right. So you cannot blame the product class. You need to blame the person selling the product. Okay. MES has now said that ILP is a complex product. Starting from December 2025, MES is going to require enhanced disclosures, suitability checks due to rising complaints. And this is not small, 211 complaints in 2024. Okay. Transparency and education. The people who support ILP say that modern ILPs have clear fund fact sheets, charge tables, and benefit projections, right? Humbly ignoring the victims who have bought ILPs. All right. Critics argue that the disclosures are too complex for retail comprehension anyway, and the true cost is still opaque and not comparable across insurers, right? Okay. And performance reality. some people say that long-term investors can still get decent returns when markets perform and the costs are managed. But the empirical data shows that net performance trails comparable direct funds due to the drag from multiple charge layers. Right? Is that there's obviously no way you can win because your expenses are so high, right? Compared to a person that intelligently allocates his funds into, for example, an ETF. Okay. All right. So now let us summarize these opposing views. Okay. So generally, the pro ILP view is that ILPs are not inherently bad. They serve specific investor profiles needing insurance, plus discipline and managed investing. But the anti-ILP view says that structural costs, complexity plus mis-selling outweighs the benefits for typical retail investors. And the regulator is now slowly siding with the anti-ILP view, right? They are tightening suitability rules by December 25, reflecting systemic consumer protection concerns. All right. So these are all the issues. And I think this is a very good way to understand both sides of the argument so that if you were to take a more extreme stance like me in some other blog article, I might hold a very anti-ILP view, but I always do it with an understanding of what the Commission Financial Advisor's position is, right? Because I want to rebut them and I want to deal with them when the interest comes out. And I noticed that a lot of these Commission Financial Advisors, their arguments tend to be very emotional in nature. Fortunately, you can be as emotional as you want. ChatGPT, an artificially intelligent large language model, does not care. They will summarize everything point by point. And I hope that you will find that this video that I've come up with is exceptionally balanced, okay, because it considers both sides of the story. If you like my content, you can subscribe to this channel, right? You can buy me a coffee at this link. And if you want to listen to my life story and how the financial independence and retire early movement works, Google ERM intro and take the first link. And I'll see you on the next video. Thank you very much.